All right, mentorship. I'm sure at this point in time, you guys have watched a bunch of the other videos in the beginners and elite course that have a bunch of really good strategies. So what we're going to be doing today is actually using the Fibonacci tool, show you how I use the Fibonacci tool when trading at all times. So I also don't use the Fibonacci tool only on its own. I use it incorporating a bunch of the other strategies that we have before, because it's very important when using the Fibonacci that you need to know market structure, you need to know your different time frames, you need to know when the best possible point of entry is. You just need to know all these things. So you utilize all of taught you before, and then the Fibonacci will actually be like a great additional tool on top of everything you know, because like I said, I am a pure price action trader. That's just what I like to do. Everything else is just additives to my initial ability. So pure price action, I just go off market structure, price behavior. That's basically all I'm going off of when I trade. So the Fibonacci tool, however, is very helpful in certain situations because it can be a very great confirmation tool, especially to enter certain trades. So let's just get into the video. It's not going to be too long. It's going to be very quick. It's a very simple tool to use, and because at this point you've watched all the previous videos as well, so we don't need to go through everything else in depth, but we're just going to cover the Fibonacci and how you're going to utilize it with the other strategies. So without further ado, team, let's just get into the video. Okay, so what you want to do first is actually get your Fibonacci, and what you guys want to do is actually use these settings. These are the settings that I use when I trade using the Fibonacci. So what you want to do is just take a screenshot, or I'll take a moment. You guys can just go look at the settings and put your settings exactly like this, and then from there we can proceed with the video. Okay, so when it comes to the Fibonacci, what you want to pay attention to is, of course, market structure. You always want to pay attention to market structure. So lower highs and higher lows. So over here we have a lower high. You see we got a lower high, and then we have a lower low right here. And as you can see, price did not make another lower low. If anything, it failed to do it and went all the way to the top, right? So this is what we do when we are using our Fibonacci. So because, of course, price has failed to make a lower low, this basically indicates as a point of where price is reversing. So this is a price reversal point, a reversal of trend. So from going downward, we're going to the top side, right? So this is a reversal of trend because, of course, it did not make another lower low. So what you then want to do is, of course, whip out your Fibonacci, and so you start from the bottom all the way to the top where it failed to make, of course, the lower low, right? Where it failed to make the lower low, and that's what you have, and that's how you draw up your Fibonacci. You just pay attention to price, to market structure, and this happens, of course, even if you were doing vice versa. If you were doing a bullish trend and you were looking for higher lows and higher highs, and then if you fail to break, vice versa, same thing. So what we're looking at right now is the 0.5 and the 0.618. This area is known as our golden zone. This area right here is known as our golden zone. Basically, this is the area we look to take our trades in, right? It's where we generally look to take our trades. Now, what this means is basically we, of course, mark it up at top. As you can see, price did come down to the 0.618, and of course it's rejected off of this level and is proceeding on upward. Now, another thing that can happen with this particular strategy when using the Fibonacci is always take note. If you enter a trade at this area, the golden zone, there's always a high chance that at the 0.382, it could always either create like a double top or reject off and come back down to the golden zone and then proceed on in the general direction that you wanted to go in. So it's always something good to always remember. They do expect resistance at this level, do expect slow momentum at this level. However, if of course momentum is like super strong and it's like really moving, it's really pushing, then of course you could see the breach and proceed up, and then it could continue upwards, right? So you want to enter usually around this level, but you don't want to enter just like off of, okay, it's not the golden zone, I'm going to take a buy. No, there's a couple of things I want you to always look at when trading this. What you want to do is have, of course, your support and resistance, right? See if it's corresponding. I mean, and it is, it is on our area of support and resistance. You want to have your areas of TP, so you mark up the previous areas, right? The price target points, which are right above here. I mean, we have areas where price has touched. We have another area right over there, and we have another area right over here, and we can proceed on upward, but it's just generally up to you, of course. So we have our areas of support and resistance. We have our fib, showing us that price is in the golden zone. And then what you're gonna do is, before entering on this particular trading time, before even entering on this trade, what you generally want to do is, of course, then drop to, of course, your M5 and look for the best point of entry. Okay, so I generally use the M15 when I use the Fibonacci, just because I'm a day trader. So when it comes to using the Fib strategy, I want to use the M15 just to catch the quickest movements. I don't really want to use the H1 when using the Fibonacci, because I'm usually just trying to trade, the golden zone, maybe to about the 0.382, because the pip gain on that usually is pretty crazy. It's pretty good. It's usually above 100 points, which is like about 1,000 pips. So, we don't really go for anything higher than that. So that's why I generally use it on the M15. On the H1, you can catch major moves, but I'm only going to do that when I'm like scalping. If I'm not scalping, swing trading, that's when I'm going to use the H1. So back to, of course, entry. So you drop to the M5, and then the M5 is when you of course going to determine your entry point. You of course going to determine it off of you're of course going to determine your entry point based upon your bullish engulfing, strong bullish movement. Bullish engulfing, you probably have entered, then cross-reference with your M15 to see what the candlestick is doing. And of course, you probably enter your trade, keeping an SL, nice and safe, maybe below right over here, just to keep it safe out of, just to not be taken out of the trade at all. So I'm just showing you this as an example as to how you would generally use it. SL, safe zone. If you're holding it until here, it's pretty good. That's generally what you want to do. So entry, of course, would be a little tighter and the SL a little tighter. But if you want to hold it a little longer, just keep the SL a little safer. And then, of course, that is for, if you would really want to make a lot of money off of this trade. Of course, making sure that it cross-references with all your other analysis as well. So as you can see, if that was your point of entry that you had picked, you see what generally price is doing. It's gone up to the 0.31 level. See, slowed momentum, and it has come down all the way back to entry, almost at SL actually, almost at SL. Still proceeding on upward, still respecting the zone, still respecting our area of support, still respecting our golden zone. So we got those two confirmations. We have price consolidating basically in this range, not doing too much, but then of course definitely finally breached. So it was a long wait, definitely a long wait. But do you see how, like I said, price can reject off of this area, can reverse on this area, create double tops and come back, of course, to entry. But when we have our golden zone in place and our support and resistance in place, we know that if price is not breaking through and closing below, then we're still safe within our trade. But of course, if price is of course going to be breaking through and closing below, then of course we are out of the trade. Remember that trading is not 100%, but that's why we have all these strategies and our confirmations for the best possible advantage to give us that 80% to 90% success rate when it comes to trading. So as you see, it did respect our level, and what offered me more comfortability was the fact that we had our support zone. So because we had our support zone, we were definitely safe. Particular trade. So that's how you're going to be utilizing a lot of the other strategies I taught you into this very particular strategy with the Fibonacci. Not too difficult, very simple, but the Fibonacci is going to show you areas you do want to trade in. So if you have support and resistance marked up in general, like different areas, or maybe it's below here, but you're seeing like market structures doing something different, do your Fibonacci. Your Fibonacci could show you a better point of entry before it even touches your zone. That's the importance of the Fibonacci. You just know that you are entering your trades based upon the 0.618 and between the 0.5, and of course paying attention to price action, price behavior, and then moving forward with your trade. All right, that's it from me with the Fibonacci. I'm gonna catch you guys in the next one. Appreciate you guys for watching and being a part of this mentorship. Appreciate you guys. Let's get it.